None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Good morning, everyone. It is Friday. Morning, Mitch.
Morning.
Yeah. Lots going on, certainly with the shooting down of the plane in the Ukraine. Malaysia Air is not getting a real good record. I'm not looking to book a flight on that. They got, they lose a plane and now they fly over a war zone. So, anyway, I'm sure that anytime you fly internationally, those of us have... I always feel vulnerable, and I don't know why. Just I spent a better part of a month in China several years ago, and it was funny. They fly different. Everything's different. And it just feels awkward because it's not that normal experience. All the things you expect to happen anyway. But that's a real shame. As I was talking about in commentary last night, there's probably little effect, the fact that the market sold off hard yesterday, about 1% anyway. I don't know if that's hard anymore. It's pretty much when we have normal volatility, it moves about 0.5% to 1% every day from day to day. But we're really, this thing is rebounding here. Most of what was lost yesterday is back, and as it should be, because at this incident, I don't see it escalating anything, since one guy says he didn't do it, and the other guy says, well, we didn't do it, and no one did it, but the plane's on the ground and lots of people are dead. So, but it doesn't look like it's some kind of crisis where, another Ukraine, World War III starts from the Ukraine or something, one of those. So history repeats itself. It's just one of those things it is an international crisis, but not an economic crisis of any sort, and that's... And as I mentioned in commentary, I figured within 2 days we'd be back to where we started, like nothing happened. And this morning was kind of meandering around, and then I think that attitude by a lot of market participants are starting to flow back in. Overall, this week has been somewhat of an interesting one. We got through all the Janet Yellen stuff and all the fun stuff, and going through all kinds of things that we have been enduring over the last couple weeks, and earnings continue to come out, some good, some bad. But overall, the economic reports that came out today were a little softer than expected, but nothing, I guess, that would be material in any way. You didn't see anything out there, did you, Mitch, as far as...
Yeah, everything that came out in the last day or so has been pretty benign as far as results. Housing starts consensus was at 1.026 million, came in at 0.893, so that was a little soft, as you said. Jobless claims, they were expecting 310, it was only 302. So that's a good sign there. Consumer sentiment was consensus was 83, came in at 81.3. So it was slightly mixed, but even then, it was essentially flat versus the actual consensus.
Right. Yeah. So overall, like I said, the week that's unfolding, it was interesting. I talked about on Monday the weekly ranges. So we did an S2 R2 week, and it's pretty typical actually. And especially in the sideways range, I've been talking about that. we're kind of locked in this range, 52 to 85. We got up, I think 2 days ago, got up to 83 and change, and then this news happened yesterday and pushed the market right back down in the 50 zone, and here we are back in the middle again at 73. So nothing really material to move this market around or change any part of the underlying or primary trends that are unfolding here in it. And that's one of the things that actually, as this show has evolved, having the opportunity to talk about what's going on and ongoing dialogue has been interesting, because it really brings into perspective how much doesn't change very often. And it seems somewhat barren, maybe I don't know if I'd call it boring, but it certainly is mundane at times, where you're just like, okay, this is kind of the same. And some of the elements that we're going to go through today will be more of the same of what happened on Monday, because really nothing's changed from that standpoint. But it's nice to have this perspective of what's going on, and I think from a trending standpoint, when we get into the markets here in a minute, it really is important to understand how little changes very abruptly. Even an event like yesterday, you get a 23-point hit on the S&P, but it's not material, even though at the moment it feels emotional. And that's why we have the whole process over attitude, and that's why we are trend followers, utilizing a quantitative type thought process, which helps you to eliminate a lot of the types of things that you fall into in a normal environment when you're reacting to these emotions. So by having context of where things are and what they're supposed to be doing really helps. So we'll go ahead and move off the New York Stock Exchange and get over here and get into the markets and start to look. The chart that I'm bringing up first here is the weekly S&P. This is the cash markets, and you can see the numbers. I guess I have the context of these numbers, but 0.49, 0.34, and 0.36. I remember they were 0.50 on Monday, and we could bring up the actual values, and they'll spike around between 0.52 and 0.48 right now. And all of these, as I've talked about many times, these are expanding trend. And this trend, is what that means by expanding is that the PPMs are measuring the percent change, and then we're looking at the first and second derivatives of those percent changes to map out when there's a potential loss of momentum or what it's going to be. And we are sometimes we're momentum players, other times we are trend followers. There's a difference. There's other processes out there, and relative strength, they call it momentum, but it's really not a true momentum strategy, and you don't want to. Relative strength is a tough way to evaluate the market, because there's very little validity in some of the concepts that are happening. Especially it's a buy high, sell higher strategy. What we're trying to do, depending on the setups, and we're going to talk about a couple in our section today on the stocks. Depending on the setups, we're buying low and trying to sell high the best we can. We're trying to capture that 60% range, and this graph that I've got here now, you can see this trend has just been stair-stepping highway. Maybe this is a stairway to heaven. This is what the song was written about. I'm joking, of course, but it's like this thing just keeps stepping up, goes sideways. This same pattern has been going on, and I'm always quoting old Trader Vic, and saying, expect more of the same until the market shows you something different. It's not showing us a thing different. I'm ready anytime for a big decline and to demonstrate the value that we can bring to you guys and to all of your customers and everybody that participates in this process. But I'm sorry, it's not today. It's not going to happen this week. I think we still have a ways to go. So when we look at these trends that are unfolding, that's what's going on here as far as the intermediate trend. So we're continuing to do that. The price objectives, let me bring that up real quick, just so make sure that we can see that real quick. But the price objectives that are still valid, I always have this yellow number. It's almost impossible. I'm going to have to, the only glasses I have on my desk right now are what I call my Poindexter glasses, so I look like a pilot. They're super focus. If you've ever seen these, you can adjust the distance and where it goes. But anyway, I apologize. So look at the Poindexter look here. But yeah, so we're looking at that same numbers that we talked about, I've been talking about for a while. It says 1973 was the minimum. We've exceeded that, and then we're looking at 2034 and 2072. I mentioned this in commentary a bit the last couple of days. I've been talking about these numbers. They're still valid from an intermediate trend standpoint. They're just they would take a move well below. Let's see, all the way down. It would be, I believe it's a. I can get to the right number here. It would be right here. This low right here. So let me get to the top numbers here so I can see it. It would have to take the low out at 1814, a little ways away. We're at 1972. So this pattern is well established, and there's a couple other things that could cause some momentum breakdown. But it's all down in 1800s right now from an intermediate term basis. So there's very, very little probability. So when you see days like yesterday and moves, they're probably not going to end up to be material unless there is a true black swan type situation where you're looking at you're looking at something that could really truly affect the flow of cash and economics in the planet. Most of these geopolitical things that we've seen, the conflicts in Crimea and all the stuff we've seen in Russia and Ukraine, it's pretty much noise. Maybe there's something material that could come out of the situations going on in Israel right now. That's getting kind of tense. But that's something you just have to watch. I don't think you can anticipate what those things are going to mean, since they're on. I guess they're dynamic and unfolding. There certainly could be some things that could unnerve the markets that would come out of there. That's probably got much more potential anyway than the Ukraine. So let's take a look at the daily graph here. And one of the things that I want to be able to bring into perspective, and I think I can blow this up a little bit just so we can get a much better view of this. But you can see here, this price here, I'll get the whiteboard up here real quick. But the ranges that we saw yesterday, we are actually seeing the 3-day range indicator get up to, I believe it's up to 17. I had it somewhere here, 1720. It's been down as low as 560 during some of these really quiet periods we've had this summer. So we're finally seeing some expansion, which is good in a way. It tells me that volatility typically is running as the average is around 12 to 14 on a daily basis. So we've kicked it up a little bit, and yesterday helped to kick that up. Today is probably not going to achieve much, although we've got a range of 60. We've got a 14-point range, so we're about in that 12 to 14 range, which is typical. So there's a good chance we'll take a look at some of the future stuff here in a minute, just get an idea of how it's going to go. But what I want to do is try to give a good perspective of how this thing is playing out this week anyway. So we've seen pretty much a choppy week. Yesterday was certainly one of the bigger moving days, and that's working on being completely negated right now. We're up 1529. So if we'd have had maybe a normal day, I think we were starting to trade off a little bit, and then the news came out. So we were down 4 to 6 at one stage, and it kind of got hit hard when the news came out about the shooting down of the plane. So but yeah, from the trend standpoint, we're seeing an inside session, which is oftentimes when you get these big ranges, you'll see the next day with an inside session means that we're trading. We did not take out yesterday's low, and we're not taking out yesterday's high. So we trade inside, and it looks like we're currently back above the 10 and 21 period moving averages on a daily basis, and that's probably pretty significant, especially if we stay above there. Let's see what those numbers are real quick. I just bring that up. Those numbers are nice. Those numbers are right now. I've got the wrong tool up, so it's going to. Those numbers are. For right now, we got 1971 and 1967.40. So those are the numbers that you're going to be watching into the close today. So close above that level is going to be pretty good, I guess, as far as the trend reversal. And I do expect that this thing will stay in this range. It should be choppy for a couple more, and then we should move on. We'll take one quick look. Talk about watching paint dry. This is the paint dry chart. This is I always call the super slow-mo, the monthly graph. Nothing's changed there. These trends are, I just want to reference them, so if you didn't see the show on Monday or haven't watched for a while, that you'll at least have this perspective. These long-term trends are very, very robust and not about to end at any moment in time. We got a 1.59 also on the ppm2, and then we have the ppm3 at 1.07. These are all expanding trends. These are very robust, and as I've talked about before, what I'm looking for is that the 10 or the ppm1 that's tracking the 10 period moving average, which is very similar to the 40 week, which is something, if you look at the values, it'd be very similar to the 200-day moving average as well. This number is, this moving average is rising at 1.59, and what that means is that the probability of the market dropping below that average right now is less than, it's like the days when you look at the weather and it says rain chance 10%. That means there's not a cloud anywhere. And they put it up there because maybe a cloud will show up, but there's just virtually no chance right now for this to happen, and won't happen until we start to see this ppm1 drop probably below 1%, and then we'll start to see the ppm2 and 3 remain in somewhat of a robust mode and starting to gain, and the moving averages will start to converge, which is the sign that at least there's a topping pattern coming. Doesn't mean that's the dead end street. It just means it's a time where the trend is going to consolidate or set up a topping pattern at that time, and that's something we'll look at that time. We talked about on Monday, VPM database still very robust, 68% plus bullish, which is about as far as it goes. 68 to about 72. It was up around 70. We dropped a few percent last week, but we're seeing some real moving around in some of the emerging the small caps and other things that are going on. We're going to touch on that later in the show. Since that's pretty much it for the S&P, other than I think what I'll do is I want to show you that these international charts have EFA and EEM here on a spread differential, and you can see both of these charts are trending down and are continuing to make new lows. And what these are, it shows that the S&P is continuing to do better than the emerging markets and the EFA, which is basically large cap Europe, if you will. The basic constituents of that would reflect overall, continental Europe anyway. So nothing's changed there. You can see these charts has just been, this goes back to 12, and I think if I open this up, yeah, this goes you can see all the way back from 09. This has been the case. We were trolling John Hussman pretty heavy on Monday. We had fun with that. Don't know why anybody would own a Hussman fund, based on what we are looking at anyway. You could have blindfoldedly owned EFDI, which is the lowest return of our global strategies, and he's actually been. We figured out he's the best contrary indicator there is. He has been. He is his graph looks like this on the S&P. We did some comparisons anyway. So much for Hussman. But the point is that these international markets are actually continue to underperform. I don't know why we're beating on Hussman. I don't know the guy. He probably doesn't deserve that, but it's sometimes it's just the realities of things that go on. You got
well, I think what it does is it's a good example of, if you get so convicted on a bearish forecast for the market, that's what happens. I think it's a great testament to that.
Hey, listen, I don't think there's been a moment since '09 that you couldn't stay negative and find something to point at. The debt, I mean, you can just go on, and a lot of folks have gotten stuck into that, and therefore they've ended up talking to their clients about all the risk, and they missed one of the biggest bull markets ever in history.
And it's one of those things where, if you look at the fundamentals, maybe they're right. It's completely mispriced, but people are paying for it and the market's going up higher.
Yeah.
So on a long-term basis, you may be right, but you may not have any clients around by the time that you prove to be right.
Yeah, and certainly that looks where John Hussman's heading, because I don't know. Did we ever figure out how much money he has in his funds?
No, I didn't get a chance to do that.
It amazes. I'm amazed, folks, when I see just this terrible. I guess it's about marketing. You can be really, really bad at what you do, but somehow bring out this vision for the world that they think you're better than you are. I don't know. Maybe I'm just getting too far. I mean, There's other guys. There's other perma bears. You got Dr. Doom, and I was at a CFA meeting with Brett many years ago, and I had the opportunity to talk to Mark at Point Blank. He was doing the keynote at this meeting I was at, and he was bearish then. He's still bearish, and the world is coming to an end. And I guess it's a German accent he has. I can't figure out his accent. I never researched to see where he's from. But anyway, you just get stuck in the head and about these scenarios that you think is going to happen. And let's face it, in this business we are storytellers. We tell stories, and that's how we sell, and that's the way it goes. And and clients shake their head, and we go on, and and we do whatever strategy are. But the beauty of the VPM environment that we've created is it gives you the ability to have much more flexibility. And this show is about having the context and understanding of what's actually going on, and not that I was thinking it's strange. This process has led me in such a solid path over the last 30 years. It's been about, I believe it's actually been 30 years. 1984 is when I first started embracing all the PPMs and the concepts, and that's when Dr. Prater and I were doing that research in '84. So that's scary. It's been 30 years, and it's one of those things where you continue to see things happen, and that's why I keep trying to bring the perspective of when we talk about the database and everything we're rotating. So I'm kind of down some rabbit trail here I need to get off of. But these the futures cycles have been pretty reasonably consistent anyway, from the standpoint of we had a high cycle here. The low cycle really didn't hit where an actual low was, but it did start the acceleration phase of this move up. And you can see we had a high here, so we're probably within 20 minutes or so. I'd have to look exactly what this looks like from a standpoint of, but it looks maybe within the next hour there's a possibility for a high for this market, and so maybe we'll see some consolidation or pulling back. These moving average lines here, and this is the 24-hour futures charts, in case you were wondering what we're looking at, and these are really kind of I guess the best way to put it, they are really indicating how even the international influence in our markets happen when we're all sleeping. So anyway, let's see, anything else? Yeah, one more thing. Let's wrong chart. Let's look at and see what the treasuries have done this week, because that's always of interest. So we're here at 249 and continuing to be back into the range. So everything has went back into the range which we have been in. So it looks like we get up to the high end of the range on the interest rates, and we've fallen back in that 250, even seeing some 240s again. They seem to be a thing of the past, and I think we get down to 240 exactly, like 240 and change. So this has actually got us to the point where this market is losing lots of momentum. This is a weekly graph. There's not a lot of momentum in either direction, and we're just trying to waiting for some sort of breakout. It still appears, when we go over to the monthly graph real quick, and then we'll move on here in a few minutes over to some of the stocks that we want to review and some things we want to talk about today. But you can see here, this is interesting. I hadn't noticed this actually. I don't know if it was here on Monday, but we have an exit. So the higher on a monthly basis, it looks like the trend has broken to the point where BPM is saying it wants to go neutral here. So we could see maybe even more of a retracement here. I have no idea what's driving these interest rates and keeping them in check like they are. They're just a tremendous amount of money that maybe is risk averse to a point, and I don't have an explanation, so I'm not even going to try this one. I'm going to back out where I can. There's not really an explanation other than it is happening. There does appear to be cash flow there. We have seen some money move around. Mitch, wasn't there some movement in some of the bonds last week? Do you recall?
Yeah, we did see some selling in some of the bond funds. I think it was this last week.
Yeah. So not sure. I don't remember which ones right now. Maybe you can take a glance at the look at the dashboard and see if there's something there. But the bottom line is there is cash flow there. Rates are continuing to decline, and that's the story. And as I talked about in the past, I actually don't think, even if we got above 275, maybe 290, that it's going to affect the sentiment in the stock market as far as what's going on here. So it's interesting to watch what's going on here. And meanwhile, I don't know, there must be 75 to $100 billion of new paper coming every week. When I started in this business, we used to have quarterly refundings, and it was sort of like earnings reports back in the old days, and you would sit there and you'd watch the auctions and see how the tails were and everything. It's just become every day now. If you look at the Treasury schedule, the debt has grown so much that they're just constant offerings with everything, especially in the 3 and 5 year area. There's just a lot of paper being offered and rolled over, and new money being brought in. So even though I believe I saw a place where the tax revenues are the highest they've ever been, the government's still running like on a quarterly basis like 385 million in a hole, or billion, excuse me. There is no millions in the government, is there?
Not anymore.
Yeah, I mean, even the border situation is 3.6 billion. Does that make sense to you guys? Because it doesn't to me. I don't get how much. That's a lot of money. I mean, anyway. So
it was back on the 7th that we had the big move, and it was in the muni bond space, pretty much across the board.
Okay, that's what it was. So muni's got a little soft. So,
yep.
But all the other corporates and everything else are pretty solid yet, right?
Yeah, they are. I mean, at this point, the muni bonds are pretty much had back down to where the intermediate term bonds are, the traditional bonds, taxable bonds, I guess I should say,
yeah.
are at anyway.
Okay. All right. I think it's time. I don't know if there's anything else. Has gold done anything through this? I haven't really.
No, I mean that was one of the comments that some of the financial talking heads have made, is that gold actually hasn't really done much of anything, especially with this last tragedy overseas. It did rally a little bit yesterday, but it's down 1% today.
But you think about this plane situation here. What is really the ramifications of it? I don't even know if there's any. How do you extrapolate out risk on this thing? I get that an airliner got shut down. I get that they flew over a war zone, and maybe it was unintentional. Maybe it was just some idiot shooting a rocket up in the air and it got away. I don't know. There's people that think that. There's people that think it was targeted. And what's the chance that Malaysia Air had to be going over at that moment in time for them to have another big incident like this? You know.
No, it's a big sky. I mean, isn't that like the whole?
That is the big sky theory. Yes, if you've
Yeah.
flown any, that's what everybody operates on. You know, and the big sky gets pretty tiny once in a while. So.
I don't know.
But yeah,
I mean, at this point, we're still long gold on the 1.2 system. Let me see where we're at right now as far as VPM is concerned.
Yeah, let me see what model I have here. I think this is something different.
Yeah, weekly 1.2 for GLD, and we're back down, so we're at a loss of 7% since we took on this position last September.
Yeah, it's been forever.
Yeah.
And yeah, I still think, and I've talked about gold before, I still think there's a good shot by year end. We see higher prices. This is one of those things we talked about on Monday's meeting, one of these elongated consolidation patterns that just start to, once they start to move out of here, they accelerate pretty good. And you just got lots of, you know, I guess pin-up demand or something here when you get a market like this. And I was talking with somebody the other day, sometimes if you take the, if this didn't say GLD up here, you know, and you didn't know that it was gold and you didn't have a predetermined attitude and all the other things, it's amazing if you can take the symbols off and look at it, then put the symbol on. A company I worked with many years ago had the ability to turn off the symbols. And it was interesting because you'd look at them and you were, it appeared anyway that you maybe were more objective than you might have been by, you know, when you go, oh, it's IBM or it's you know, Cisco, it's whatever. And you
Right.
immediately have some kind of predetermined attitude about what it might do or that it's whatever. And that's the thing that I know in Process Warriors we talked about a while back is that human element that flows through just about everything we do, because we can't get rid of it because we actually are human. So you're going to have some emotion, something that comes into no matter what you're looking at, what you're doing all the time. And it's hard to detach from that stuff and not have it affect some of what you're doing. It's taken me a very long time. You know, probably my first 6 years of running models like this, there was always that tendency. Anymore, I'm sort of detached, and you know, it's not really. I don't have the emotions. Occasionally they show up. I remember 2011 was just nuts because the volatility was so high.
Right.
Just all the stuff that's going on. So let's go ahead. I guess that's about all we can do here. There's really nothing out there.
Yeah, nothing cool.
I still got to
you
get
wanna
my
touch
summertime
on,
blues. I got to get my summertime blues song out somewhere, and I've got to get that because that's really what we're experiencing here. So
I did want to touch upon EEM on the 3.2 daily, since we did have a sell on that today for the Global Equity Strategy 4 system.
Yeah, let me bring that up and let me get on daily here. And I think right now I've got it on the wrong model.
Yeah, you got it on 1.2. So let me see.
We want 3.2 daily, right? 3.2.
Correct.
And I think now I have both on the way this thing works.
Yeah, we bought EEM back in March 19th of this year.
I'm on weekly, so let me get the daily, and then we'll finally be there. There we go.
We bought it at $39.11.
Yep.
And let me take a look and see what it opened at today.
I can tell you it's right on the screen for everyone.
There you go.
It opened at 44.10.
44.10.
So I guess when we're looking at this symbol here, I mean, if you look, I'm going to get both Mitch and I off screen here just so you can see the chart because you can't see the trade as well. But if you look here, you'll see that we bought this thing pretty much at the lows.
Right.
And by the way, this symbol, this trading model is the superstar of Global Equity 4 by far. This thing just keeps cranking out the the money, and it's crazy how good it has been, and it's the only thing that runs on a daily in an entire portfolio, but it is just a stellar performer. I don't know what it is now. It was like 49% of the profits in that thing was generated by this symbol. So I guess you should put all your money just in this symbol, not diversify and then trade that way. It's funny because I grew up in a world that's what we did. We would have 2 or 3 things, and I had a managed program once upon a time that it was my old TRS trading system. And it was on commodities. We would trade just treasury bonds or just gold. You could pick a currency. We had about 9 different markets that you could trade, and we would trade just that. And it was a $10,000 minimum account, and we used the models that I had at the time to buy and sell those, and that's where my famous 235% gain came on my bond trading back in 1981. I was like the hero of the region, and even national levels at Shearson American Express, which was Smith Barney, which is now, I guess, part of Morgan Stanley, Smith Barney, E.F. Hutton. I mean, if you looked at all the firms that are embedded from the old school days into those firms, it's pretty fascinating. That would be interesting to actually break down the whole family tree there. The lineage of Morgan, what's now known as Morgan Stanley. Anyway, so but yeah, this symbol, this is pretty good. Stair-stepping. Finally, some risk came in, and out we go, and that was it. I think Mitch, I don't know if you had any other thoughts on this symbol.
Well, I mean, just one of the big takeaways I think with this security in particular is talking about how you were raised in the industry. For a lot of advisors, it's uncomfortable for them to put more than 10% in something like emerging markets, because they have that MPT mentality that, well, this is considered a riskier asset when it comes to asset allocation.
Yep.
And the truth is, in case of Global Equity Strategy 4, I believe we could buy up to around 30% in this position at any given time.
31.45 or something like that. Yeah.
So I mean, you certainly can make some healthy plays when it comes to the equity exposure to this. But really, if you look at it, just like you said, look at the trade log on the 3.2 daily. It's done a phenomenal job of capturing the trends very well, handling that volatility and managing that risk in such a way so that it gets in and out. 2008, 2011 are great examples of how this has been able to sidestep some serious pullbacks within the security. And we've taken an asset that many view as riskier and made it, probably the best performing. Well, yeah, the best performing component within that strategy.
Well, one of the things I've got here on the screen, Mitch, while you're talking, I brought up we had a purchase. Let's see what the dates are here. This goes back just earlier in 2013, but we sold out. It declined, and then we had, like you said, it's got some really great trades. This particular, I'm going to format the symbol, and let's just go back. It's only going back 2 years right now. So let's go back 5 years just for fun, since we're digging into this thing a little heavy here. But when you go back and you get to, just trying to find, is this 2012? It is. So you can see, I mean, this symbol has handled all these swings just beautifully, as Mitch said, and it was some time ago when actually it was during 2011 when this strategy emerged, actually. Right. And we were dealing with and trying to help all you folks deal with the volatility in some of the portfolios. The standard root strategy that came out of this was of the global equity series that we have was ETFDI, which was what it used to be called, which was just a domestic international blended strategy that I built way back in like 2003 or something. But the point of it was always just to have that rotation capabilities. But when the volatility came up, we saw that the weekly models were not responding at the same level, And if you look back on this strategy all the way back to 2008, it was phenomenal even during '08. It made a big difference. I think this strategy was off half of using with EEM in there. The downside was half of what the standard other strategies, the ETFDI and mostly the global equity, probably 2 or 3 that we have out there. That's probably sometime we probably do a whole show on that whole global equity series that we have. Yep. And we've recently been working on some new stuff there. So yeah, it's we've actually, Mitch and I have been having a lot of fun working on projects. It has been fun, right, Mitch?
It has been fun. It's certainly got me going. Talk about just going back to what you mentioned a little bit ago. I had the opportunity by creating some recent hypotheticals or back-tested stock strategies to really go through that process. It's been a while since I've done one quite so elaborately. And I did have to resist the temptation of looking at the ticker's name and see, well, do I want to pick this one or not? I just looked at the data as it was presented. At one time, Netflix did pop up on the list, and so I was just curious, using this process, did it stick around? And it didn't, unfortunately.
Yeah.
But the strategy still succeeded, regardless whether Netflix was in the basket or not.
Yeah. And by knowing it's there, you go, maybe we'll just throw Netflix in this quarter. We can make it look good. So, yeah, some of the things that, I know we're not doing the Process Warrior shows. They will come back. Yeah. But the bottom line is some of the things that we're working on to make all of us better. Mitch has been able to really automate a lot of processes and a lot of thought process. For many years, I've talked about, if it can't be automated, then we don't do it. And we were doing a lot of stuff that was manual. Somehow that happened. I don't know when that happened, but we're kind of reverting back to the mean, if you will, and back to that original thought process of really having very quantitative processes that you can walk forward and see what the results are. And we have the ability of getting both a fundamental map along with the VPM to walk forward both fundamentally and what VPM's doing. And it's been a good project, which you guys are all going to hear about sometime soon. Along with the TradeStation VPM, it's called VPM Market Mine, that will be coming out. We're down to the final parts of just being able to authenticate and do some things, and I'm waiting for a communication back from the TradeStation folks. I'm trying to see if I can get a group discount of some sort for people that are just sign up for software, but you can get it free if you move a trading account there. So it's pretty simple to get that. So okay, moving on. Let's
also talk about sticking with the international theme for a little bit longer. EFA, it's also on the 3.2, but in this case weekly, of course.
Right. I'm switching over here right now.
And I don't think we discussed it on Monday, but we did get a question from an advisor about why were we selling out of this back on June 30th because a dividend was recently paid out on it.
Right.
And I think it's pretty interesting seeing how the market has handled this stock ever since we exited out of it back in June.
Yeah, it's interesting. On mutual funds and other companies, I guess that we could look at, this is in the same vein, but one of the things I've talked to advisors for many years, and it's hard to believe I was talking to somebody the other day realizing that I have actually been running this company for 16 years. I don't know when that happened, but it's been a long time. So I've had a lot of dialogue with many of you out in the field, and it's just one of these things where trying to keep the context of how these trades work, how they unfold, and what types of things to expect. And one of the things on this dividend issue always comes up is, gee, we just sold out because of dividend, and about 90% of the time, and the probably the most significant one is I believe if we look at Microsoft and the big giant distribution that they did years ago, like $20 or whatever it was, the giant distribution they did. We sold out because of that, but we got the distribution. So net it was the stock didn't really drop, but it dropped on the chart because of the dividend. And everybody said, well, gee, we sold out because of dividend. Well, if you look at what Microsoft did after that, it didn't get any better. It just continued to decline, and in fact, it went to into this flat, mature company that just didn't do anything for years. And recently, they have done a little better in the last couple of years, just because the large caps have come into vogue again. But the bottom line is, when VPM selling, yes, sometimes it is generated by that, and the argument has been for many years is that when, especially on an individual stock, and spin-offs, any type of big distribution or anything that happens, that money is no longer in the company to grow. It changes the profile, the fundamental profile of that company when these things happen, and maybe it doesn't seem intuitive. They just paid out a dividend. But if you're running a company and you do, Microsoft, obviously that the big dividend play was to get Billy Gates and all the boys a big payday, and actually the tax advantage, because there was a much lesser, it was a 17% taxes on at the time for dividends. So why pay long term? It was better than, I think, capital gains at the time. I forget how the exact numbers, but that's why they did it. They distributed out to the people that had played in that stock for many years. But it changed the nature of the company. It changed the dollars that they had to do acquisitions. Everything they did was different. It was a different company that day, and that's a big distribution. But these smaller ones, these things do affect the stocks. They do affect the sentiment, and maybe there's a psychological thing that happens here too, because it's most of what happens in the markets. One of my very early mentors, Chicago Board of Trade, 1979, we were standing by the soybean pit, and he said, you need to understand, he goes, that the price of soybeans is not made in the fields, it's made in the minds of men. And what he meant by that was what people thought it was worth is what it was worth. It had nothing to do with the fundamentals of how many beans there were or weren't. And it's the same thing with stocks and everything else. Why is the market trading near 2,000? Because people think it's worth it is what it is. And I got to tell you, it's very bullish. Jim Cramer thinks you shouldn't buy stocks right now. I was very excited to hear that. So this is a good thing. We got Hussman on Monday. He didn't want to buy stocks, and he hasn't bought stocks since, I think, 1920. So I'm not sure he's ever owned any stocks relative to his performance. There we go again. I'm back on beating.
I did check. He's got $1 billion in that one fund that's down 27% or so over the last 5 years. So
I'd like to know what it was last year at this time, right?
Yeah.
I'm hoping people are smarter than me anyway, taking their money out. So okay. So from this standpoint, we did see that this stock decline a bit, or this index decline a bit, and you also see that the PPMs on this thing, the trend's failing. So the fact is that this thing started to roll off. You had all the PPMs rolling over. The trend is starting to fail. Does it go down 30%? Who knows? But what it isn't doing, and this is an important concept when you're a trend follower, if the trend doesn't exist, you have to be on the sideline. I can almost use the OJ line, right? If it doesn't fit, you must quit. So if it doesn't exist, you must exit. I don't know. I have to come up with that. That was kind of corny.
You're on your own on that one.
I don't blame you. I was back off on that one. I got you on screen, so I'm trying to make you a guilty accomplice. But the bottom line is, that's when the trend fails, you don't want to be in this stuff. This is really what it's all about from the standpoint of being a trend follower, which we are. And we're not a relative strength follower. We're not trying to figure out which is working better than the other ones, which is the buy high. I always call it a buy high, sell higher strategy. We're literally, like you can see here in this initial buy, I'll bring up the whiteboard just for a second here. We see being slow coming up, sorry. But right over here where we bought this for this trend, I mean, this was the back in 12. That's a huge run, and we bought low and sold high. That's what you want to do. We didn't buy it because it was moving better than something else. I was looking at the Dorsey Wright funds too. They're very unimpressive, by the way, and they're using the relative strength technology. It still amazes me that these guys have gotten as much visibility as they have. But the bottom line is, you know, you're always going to be better, you know, trying to. What we do is we're trying to find the patterns that set up that will generate the momentum. So at the time when we're buying these things, like this particular case, there was no upward momentum at all. What there was a pattern that had a high probability that it was a low and it was gonna move up. And you can see the previous exit over here was a similar situation. I'd call it to here. I'm not saying we're going to decline this much, but we may. This was probably 2000 and it was late 11 when we were still seeing some of the European stuff go on. But the bottom line is, you know, you've got to look at the context. And so when you see these sells, I had a guy that had been a client for a long time, and his favorite line was, he goes, you don't have to do the buys, but that VPM puts out, but never ignore the sells, because you never know when that next sell, and that's been one of the cases. And as we emerge in, so if those of you that like to deviate and be smarter than the system, this is for you. One of these times you're going to deviate, and maybe you deviated on the, I'm looking at 2 cells here and it's higher and you feel good about that. One of these cells is going to be the one you wish you'd never deviated from. And that happened in 2008. Mitch was working with another shop many years ago, and in 2007 there was a bunch of folks using, Mitch, you guys included, a value line strategy, using some of the UITs and getting lists from there and doing a once a year deal. Well, if you refreshed in December of 07, you got absolutely hammered on that strategy in the first 2 weeks of the year, because it was forcing you to do things you probably shouldn't be doing.
Yeah, there was a little bit more at play with that, as you know, just getting more heavily invested than they should have been. But
yeah, and so, you know, and at that time, a similar stat, VPM, and when the market topped out in November, was pushing around between most equity strategies 40 to 60% in cash at that time as we started the year. So the strategies that were adhered to and those sell signals that came in both mostly in early December were the best things to adhere to. And I had consulted a group that said, don't go and be fully invested here. This is not good. I would match up with more of what VPM was doing overall at the time, which would have been maybe 50-50, but you know, it was pretty brutal. The first 2 days of 2008 were minus 8%. It started off that year just started off not fun. So anyway, what else we got here, Mitch?
How about SanDisk, SNDK? So this one popped up on a list that I saw recently in an article saying, you know, are these stocks overbought? They're up another 2% today. And we've been long this since January of last year, up 100 and some odd percent.
Wow, that's bizarre. Is that good range here on this stock? Is that a huge down week though?
Let me see here. I think they did have some weakness recently.
Yeah, I'd call it weakness.
I am looking at it on a weekly basis though, so let me pull it back up.
Well, yeah, because VPM wasn't going to update until tonight on that chart if you're looking at that, but.
Yeah, it did have some weakness. Let's see if there's a distribution or something that was paid out.
Yeah, it looks like there was a gap on Monday down here. I got the daily up here, so it's pretty intense actually. But overall, regardless of that, if this trade if you didn't put it on last week, you should be feeling pretty good about this if you have it in there. As Mitch would point out, this is finally broken through the trend, and this is actually really interesting to bring up. This is a good stock because the PPM 1 is 0.58, and typically when you get that plus 0.58, when you get that type of move, let me move out of the way here for a second. You can see that value, but the 0.58 here positive 107, which is the 21. So if you didn't own this, be a good day to buy it. It looks like down at these levels, when down toward this 21 period moving average. And typically with a 0.58 move on this PPM1, the market's going to have a tendency to rebound to or back above that number. It's going to act like almost like a magnet to that price. So if I go in here and take a look at what that price is here.
Yeah, and it was earnings related. They announced earnings yesterday. They were expecting, looks like they were expecting 1.74. They get 1.68. Let me double check that.
So yeah, so anyway, the pattern though from an intermediate trending basis is still pretty good. Mitch, when you get done with that, what did you notice? What did you say the profit was on this?
100%.
Yeah. So even with the weakness that came out this week, and literally in the last couple of days, it looks like that.
Yeah, yesterday.
Yeah.
Yesterday it dropped 10%, 13%.
There you go. Yeah. So, but yeah. So this is, this is from an intermediate trend is still good. Now, what typically happens here is you get a range bound stock that will stay above the 21, rally back to the 10, and then this momentum will start to bleed off over time, and there won't be an exit immediately. And as these things roll up, oftentimes, not always, but oftentimes, the prices will move back up toward the highs, may not necessarily make a new high, but where the exit from VPM will come will be, my bet it could be 6 or 8 weeks out yet before this would happen, because what will happen is the moving averages will start to roll. They're still pretty positive. 0.58 is trend mode, and the fact that we were penetrated to that had to be some sort of corporate event, but we'll see how. This might be interesting, Mitch, to put on a list to maybe look at next week or something, see how it acts, see how it comes out of here, or what it does, from that.
Yeah, standpoint. And it is related to forward-looking guidance. They were expecting third quarter to have 1.76 billion. They've reduced that down to 1.7 billion. So that's what caused the sharp pullback on the stock yesterday.
Well, we've been having so much fun. We're down the last 2.5, 3
wow,
minutes.
Yeah, we are. Holy cow.
Yeah, it's like it's game over. It's a weekend. Everybody have a great weekend. I'm going to we'll do a quick look back here. We're up 1690 now on this. Is that right? I got to adjust my goggles here. Yeah, 1661, and so the markets continue to kind of move forward. Let me get to the chart here. There's that cycle I was talking about coming in on the 5-minute. So that just hit literally this bar. So pretty good timing, and that's likely to be high. So just the expectations for the close in the week. Let's talk about that. A close over 71.50 on a weekly basis is going to set still a very positive tone for next week, and a close below that but above, I think it's we'd actually have to trade and close below probably 62. I'm just trying to look at a number here. Actually 61.10 for it to be negative. So like I said, on a weekly range, we did a S2 R2 week. R2 was 81.30. We got just a touch over that at 83 and change. And then on the downside, 53.85 was S2 for the weekly range. And so we stayed right in there, and that'll be posted on the website on Monday, along with all the other wonderful stats that we come out every week. And so we'll see how the models are responding to this sideways movement that we're getting. Last week we saw about a 2% drop, but as we mentioned, there was a lot of selling going on in the muni area. So anything for closing in the week, Mitch? You got anything?
Nothing. I mean, everybody thinks about how sharp yesterday's decline was, but really we're still positive on the week, and it looks like if we hold at these levels, we'll stay positive. So.
Yeah. So I mean, we're up 1654. We're down 23 yesterday, basis S&P. So who knows if there's further short covering and maybe more reality coming into this situation in the Ukraine from a market's viewpoint anyway. I think actually Obama was on and talked and the market went up, but that's an odd event. So usually when he gets on TV, the market likes to sell off. But anyway, we're seeing some positive stuff. It's showtime is done. I don't really have anything other than have a great weekend. Look forward to see what comes out of the models this weekend. Don't expect any material movement based on what we're seeing and things that we've seen this week. And we look forward to hanging out with you guys next week. So have a great weekend. See y'all then.